investors watching Your Money. Joining me right now is Michael Lee Strategy founder, Michael Lee, and LPL Financial Chief Market Strategist, Ryan Detrick. Great to see you, gentlemen. Thank you so much for being here. Michael, kicking things off with you. We got a mixed story this morning following a wild week for markets, and we, of course, are watching a critical week. We will be standing by this morning for August durable goods orders. That's out at 8:30 a.m. Eastern. And we are also watching Capitol Hill. Lawmakers are gearing up for a critical week. Michael, how do you think this plays out? And will markets react to the debt ceiling debate and the fact that the government runs out of money Thursday night?
Well, Maria, I don't think the government running out of money is an accurate portrayal per se, in that the government brings in $250 to $300 billion of tax revenue a month, and the debt service on our debt is somewhere between 80 and 120 billion, and then the Social Security outlays are somewhere between 80 and 90 billion on top of that. So the notion that a debt service payment, an interest payment, or a Social Security check could be missed because of a government shutdown, I don't think is very realistic. I mean, you don't want to shut down the government, but we had a 28 or 25 day shutdown in late 2018 to early 2019, and we didn't really miss a beat. I think the story for the market is the ongoing taper tantrum that we've had. You've had the 10-year Treasury go from about 130 to 150 in the blink of an eye. So it was at 130 on Wednesday before the Fed meeting. We're looking at almost a 1.5% 10-year Treasury right now. The 30-year Treasury is backed up significantly. You've seen financials take off, and how is that followed up with economic data this week? We have a huge employment number on Friday. This will be the first reading since the extended unemployment benefits run out. Do we start filling some of these 10 or 11 million jobs that are open right now, or do we continue to have people not going to work and a massive labor shortage? So I think that those are what's going to be the keys driving the equity markets this week.
Sure is. And durable goods, of course, are those goods meant to last a year or more. And so these are big ticket items that we pay for. Michael Lee, Dagan McDowell, your thoughts on where we are. Mike, we've been looking at this for a window into the economy. We're going to get another window in the next 2 weeks when we start getting third quarter earnings out. This is the final week of the quarter.
Yeah, Maria, this is a particularly good number. You also had some pretty good upside revisions to the last number. New orders was revised from down 0.1% up to 0.5%. So I think the underlying economy is pretty strong. It's not perfect. I think the rate of growth is going to continue to slow out of this recovery on a year-over-year basis. But this is a good print for the overall economy. Surprisingly, from this, you saw the 10-year trade above 1.5. That's a drastic move. The story when this number came out a month ago was Treasury yields, the 10-year down in the 120 to 125 range, and that it was, growth was falling off a cliff. Okay, we are seeing the opposite of that with this print. I think we're going to have another excellent earnings quarter. The story about earnings since we came out of the pandemic is that analyst estimates have continually been too low, and so that's never really happened to this degree in history. I think that tends to continue going throughout the next quarter. So I'll be interested to see how equity prices perform for the rest of this month.
Wow, look at the 10-year on these numbers, Mike, 1.508% right now. Dagan,